Welcome to Dave and Dharm Demystify, a FinTech Futures podcast, helping make sense of the world of FinTech and digital finance. Please sit back and listen as the two Ds take a subject and discuss it to make it clearer and easier to understand.
Demystify.
Welcome everybody to today's show, and we are delighted to welcome Khaled Talhouni from Nuwa Capital. Khaled, welcome to the show. We were due to meet face to face when Dharmesh and I were in Dubai, but I think the horrendous traffic around GITEX got in the way. Lovely to have you on the show today. I wondered if you could just start by sort of introducing yourself and then just tell us a bit about Nuwa Capital.
Thank you so much for having me, and really appreciate the opportunity for a rerun after the traffic got in the way. So.
We met the head of the Dubai labs who was talking about how he's going to sort out the traffic problem. So I think in a couple of years' time, it will all be sorted. So
fingers crossed, because otherwise I think it's getting to be a bit hectic. Anyway, so yeah, thanks for having me. Bit of background on me. So I've been a VC, so venture capitalist, for the better part of 17 years, focusing primarily on the Middle East. So I focus primarily on investing in the GCC, Egypt, Levant, North Africa, and Turkey. I also have done a little bit of stuff in Southeast Asia, Sub-Saharan Africa as well. So really an emerging market focus. Before I set up Nuwa Capital, which I'll talk about in a second, about 4 years ago. And then before that, I used to be at Nuwa Capital, which is run the venture fund. And that was one of the first early stage venture funds in the region there. We'd invested in companies like Mom's World, Insider, Careem, some kind of big iconic assets that come out of the region. And then I spun off 2020 and set up the Nuwa Fund in 2021 to really kind of continue the journey of investing in early stage entrepreneurs in that same geographic area. And our first fund, the $100 million early stage fund under the Nuwa brand, it's been launched in 2021. We've invested so far in 35 companies. I think relevant to today, we're about 30% deployed in FinTech, I want to say. So that's a big chunk of the overall fund. Our focus is early. So we like companies that are at pre-seed, idea stage, pre-seed, seed, pre-A. That's where we really like to invest. Our average ticket size between $2 to $3 million, but we can go much earlier if we need to and do a bit larger as well. We can also do some later stage deal by deal tickets with our investors. So with our LPs, we can actually do larger, like $20, $30 million rounds, which we've done a couple of already, and in companies that are a bit later stage. And then lastly, we have a joint venture for a debt fund where we're an advisor to a manager that manages a venture debt fund. And there we look to kind of help companies disproportionately in FinTech actually get access to debt capital. So that's kind of who we are. We're spread across Dubai and Riyadh, and we have a presence in Istanbul as well.
Amazing. So when you're looking at making investments into FinTech companies, what are the sort of sweet spots that you're really looking for? And I guess, does that vary between the various countries that you're looking at as well?
So I think with FinTech, what's interesting about, I'll talk about the geography and then the FinTech as well. So for FinTech, I think broadly, what's so interesting about it and why we have a high allocation to it within our portfolio, and why, if you look across the VC asset class in emerging markets, and particularly in the GCC and the MENA region more broadly, there's a lot of disproportionate focus on FinTech. And the reason for that is there have been massive gaps in the market relative to the overall evolution, development of the market in financial services. So the region is still one of the most kind of unbanked, underbanked parts of the world, even though it's not commensurate with its income per capita and general economic development. So the traditional financial institutions have sort of failed to address the big opportunities in the market, and instead really focus on kind of banking GREs and GRE related or GRE adjacent type of businesses, and then their employees. And so you have this kind of big swaths of the economy that are left sort of underrepresented, whether on the consumer side or on the B2B side. And so that just created massive opportunities across the board to invest in FinTech and really build a parallel financial system that sits a little bit outside the traditional banking or financial services industry. So one great example I like to give is Tabby. Tabby, I invested in it from my previous life Tabby is a BNPL player, I think very well known in the region, similar to kind of Klarna and other players elsewhere in the world. What's incredible about Tabby is that they probably have, and without kind of giving away any kind of confidential information, but for what I've seen, I think they have the highest, by far, some of the best performing metrics for BNPL globally, better than Klarna, better than kind of all other alternatives, much more profitable, very low NPLs. And the reason for that is, back to that point of an underserved economy. Why this works better in our markets is traditionally that segment would have been served by credit cards in other developed markets. So people would typically kind of have credit cards or kind of personal loans or kind of vendor-based financing, merchant-based financing, which would have been filled, like say in the US and Europe, by traditional banking institutions. For Klarna and the other kind of Western or global kind of peers, they emerged as an alternative to credit cards and people with subprime credit scores, right? So people that are not that don't have great credit scores, to kind of to give those people an ability to access credit. In Tabby's case and the other BNPL players like Tamara in the region, it's not that. They're actually serving highly creditworthy consumers that have just been totally ignored by the financial institutions for so long and have not built a product for them. And so that allowed this kind of rapid growth because there's hunger for this in the market and they're creditworthy. They're not like kind of subprime or they're not sort of relatively uncreditworthy individuals. These are just kind of, in another market, they would be, AAA rated or whatever, top of the credit score. So that's what's so interesting about fintech in the region. You can fill these big gaps with less risk in a way and build big businesses on the back of it.
So in terms of, I guess, the fintech companies you're interested, do they tend to be the kind of B2C at the front end, or are you also looking at some of the kind of building block kind of fintechs as well?
I think we're across the board. So I'll tell you what we've invested in heavily. So we invested in a company called Mala in Saudi that does basically both invoice factoring and also payables financing. And they're addressing a big pain point in the region where aging for invoices is super long. So basically you have like aging is like, could be as long as 180 days. If you're working with government, it could be 360 days. And this is just normal course of business. And what happened, it creates all these kind of inefficiencies in that value chain. You have working capital just getting sucked up just to kind of cover like delayed payments. And the reason why you have this delayed payments is there's somebody at the top of the chain of payments. Let's take government as an example, who can delay payments to a contractor, let's say a construction firm that they're working on a project like for a year. That construction firm then has to push their payables to their subcontractors by equal amount of time, and then goes on and on to their kind of suppliers, to their suppliers, and you just go down that chain and you see that actually this is all kind of creditworthy stuff. It's just this massive inefficiency. And that means that these firms have to suck up so much of their working capital to just kind of pay up the stuff rather than spending it on growth. And to the point I mentioned earlier, that the traditional financial institutions are not interested in doing the hard work of going to these kind of, I want to say SMEs, but it's more like the M in SMEs. They'd rather back the top of the chain, which is the government or the very large corporate, and just leave the other guys. And so what that does is they don't really have access easily to credit, or if they can achieve it, it's very cumbersome and difficult. So if somebody can come and solve this big structural problem, we think this is super interesting. So that's an example of something we've done as a theme. We believe in like solving this big problem. Related to that, we're investing in a company called Irad that does kind of revenue finance for merchants. So basically, if you're selling online and you take some time to collect, they are able to kind of front that. So it's a similar kind of dynamic. The other thing we like on the consumer side, we've invested in giving people access to basically capital markets. I don't know if you're aware of this, but we all think of the GCC as a place where people are ultra high net worth and have access to investing in equities or other products globally. In reality, actually, yes, the ultra high net worth and high net worth are well served, but you have a huge middle class, we call it mass affluent, that really have not had good products to be able to trade online or kind of build savings products. So we're invested in a company that does that called Baraka. We also have another B2B alternative lending platform in Saudi called Raqamiyya that does kind of general corporate lending to kind of small businesses. And then we did a couple of things as well. So you can see like we do things thematically. We try to find a big problem and then see who's solving that problem. So we invested in a market making, high frequency trading business that covers Tadawun. And that's really kind of capital markets infrastructure that we're really excited about, called Muwazana. And then lastly, I think we did a company called ClearGrid, which is a sort of a unique offering. They do, I mentioned like the one byproduct of Tabby and Tamara growing so quickly in the past few years is that there's been a massive sea shift in the size of consumer credit in the Gulf. It's really expanded very significantly. But that also requires some infrastructure on collection. So there's no good kind of way to collect that. So they basically is a kind of AI-driven collections agency where they're able to kind of like create ways for people to be able to pay back if they fall into arrears and stuff like that. So that kind of gives you the full gambit of our kind of fintech portfolio.
What about, apart from the capital, what else do you do to support the companies that you invest in? I mean, or is it just a very hands-off, kind of let them get on with it?
What we try to do is, particularly within fintech, I think we do a number of things. We like to take board seats where we have concentration, where we have more capital deployed. Number two, we really give them access to our network. So we have a deep LP network, investor network that we give them access to, either on the client side or on kind of other requirements they may have. One virtue of the job that we do is we get to see hundreds of companies, right, every year. And we get to see what other people have done well and not done well, and what's worked and what's not worked. So we really work on aggregating that knowledge down to our portfolio companies. So we try to kind of drive that. And one thing we're trying to do is facilitate better access to debt, because a lot of these companies need debt to kind of do on lending. So we try to kind of work with the capital providers on getting that debt to them.
It's fascinating. And then in terms of the countries you're looking at, they all have slightly different regulatory regimes. And, I think one of the things that Dharmesh and I, when we were in Dubai, we met with DIFC and the sort of regulators. We talked to VARA as well. So what you see, these regulators in the UAE, but, beyond the UAE into places like that, how are you kind of dealing with the different regulations as you sort of these fintech companies?
I mean, that's the kind of confounding element in investing in the region, which is that our primary thesis is to achieve scale. You need to be in multiple markets, at least in the GCC, and even better if you could add Egypt and even Turkey if you can. And that tends to work better in less regulated industries like e-commerce, for example, where it's easier to cross borders. Our challenge in MENA is that the fintech financial services are very well regulated, and the regulator is quite powerful in each of these markets. So unlike if you look at other emerging markets where the regulator is not as well entrenched, you're able to kind of get away with stuff and then kind of ask for forgiveness later. I don't think you can do that as easily in the region. So I'm thinking of like why M-Pesa worked so well in Kenya is like it took a long time for the Kenyan central bank to wake up to what was going on. I don't think you can have that type of dynamic here. And that's a real challenge. And we do have companies, without going to names, who've had this problem of like, how do you go cross border? Because one regulator is happy with you here, but they're not happy with you there. What that means is it like increases the cost of doing business to be regulated in multiple jurisdictions. It also means that there's another point of failure, right? Can you kind of scale beyond that? And then it creates a more difficult environment for founders. Having said that, if you're able to crack it, then you're in a very defensible moat position for a global. It's much harder for a global player to come and do that, to recreate all that kind of soft regulatory infrastructure. So I think I would say that, yeah, there is a positive to it as well, but it is the key challenge. And the best founders are the ones that are figure that out early on and try to kind of build that out from day one. Sometimes it's just not possible, but I think it's a key risk here.
I love what you said about the sort of thematic approach that you're taking, because I think if fintech's solving problems, then, you're kind of off to the races, really. It's where it's been done for the sake of stuff that I think it's had real problems. So I love that. So I guess when you're sort of looking at that thematic approach, are you then sort of overlaying things like regulation when you think about some of the founders in front of you and saying, well, look, this could be a regional play rather than just a country-specific play. So is that something else you're kind of bringing as well, do you think?
Yeah, we try to kind of bring that, yeah, for sure, like to push a regional narrative. There is an exception, just to go back to that point, which is like Saudi does have scale to be able to build a single country like asset that is of scale, but still it would be much bigger if you could add the rest of the Gulf, including the UAE and others. So yeah, we push that idea is like, we like region. We don't want to be local. I think you can create, this is building on the experience we had in the past with the exits we've had, which like the likes of like Careem work so well because they're not local. They aggregate everywhere from Pakistan to Egypt to the GCC. that's much harder in fintech. So that's the kind of critical dynamic here. So it's possible that so the open hypothesis is that can you actually build local champions that are big enough because the problem is big enough to have a massive venture style return versus actually can you navigate the difficult waters of being regulated in multiple markets early on when you're still a small startup and then aggregate the region. I would say Tabby's done that very well in being able to aggregate both of UAE and Saudi, Tamara to some degree as well. But then you have others that are very much local champions, very locally focused.
Amazing. I mean, the fintech market, I guess, certainly for here, seems to be going on forever. Like the investment, I know we've had a few dips here now and then, but even now, the fintech investment seems to carry on growing. Do you think there's any danger or any disruption in fintech? So even though it's newish kind of space, well invested, do you think areas like, I don't know, CBDCs or crypto will disrupt fintech players?
Yeah, I think for sure. I think there's a lot within the crypto sphere that can basically displace some kind of fintech players. So like easy one is one big pain point that can be disrupted easily by crypto. And I'm always surprised it hasn't happened yet is in the remittance space and on the FX space, right? Like that's an easy low hanging fruit, should happen. It's still very expensive to do remittances here relatively. Something like stable coins around remittance, it should be done cheaply and can work. So I think that's one example of like an easy one. On the B2B side, I don't know if you're aware that like foreign currency, though less of a problem in the region because we're all pegged to the dollar and it's easy. But foreign currency pairs, it's very expensive actually to do currency like FX. If you're a company in Nigeria wanting to buy stuff from a company in Kenya or Egypt or something like that, then you have to go through kind of slightly exotic foreign currency pairs and it becomes quite expensive. Whereas like something like crypto will help solve that in an easy way. So yeah, and you do have fintechs trying to solve for this problem and the remittance problem. So yeah, there is that path. I can see how that could become a problem. But I think one thing is that the scale of the gaps in our markets are so big. It's almost like you don't have to be too clever here. You can just like solve for like very simple problems, like I'm talking about Tabby and Target are the biggest fintech stories we have in the region, which is it's a very simple problem. Consumer credit, like give people credit-worthy people access to credit. And it should be as simple as that. And I think we're at that stage N0 of the life of kind of financial services in the region.
One thing I was kind of keen to get your view on was some of the latest trends in fintech. So we've just talked a bit about crypto, but when Dharmesh and I were in Dubai at GTEx, what you kind of see is the real energy that's been put into things like AI. And there was a whole conference on quantum last week in Abu Dhabi, or it may even been this week. So there's a lot of emphasis on kind of near but slightly future technologies. And I was just wondering, how do you kind of keep up with those? What's your view on how the region will play in some of these things? And if people come to you with ideas for businesses around these, are you kind of looking at them seriously at the moment?
Yeah, I mean, we can. I think general perspective of like some cutting edge stuff. So I think there's room for the region to leapfrog a lot of stuff. So I think that's very possible for the region to kind of leap because like it's not as beholden to kind of legacy. So one of the positives of not having a deep financial services industry is that actually you can just kind of jump over it, right? You can go to the next stage. So one analogy I like to give that's unrelated to fintech, but I think you can kind of learn that lesson is I remember in 2007, 8, 9, when, we were looking at even as late as 2011, 12, people would be talking about, we'd be looking at investing in the tech space in the region. And then the main problem was, look, nobody has, there's the number of connected users in the low tens of millions in the region. And it's going to take hundreds of billions of dollars to get fiber to the home in relatively underdeveloped markets for them to access financial services or to access the internet. And then from there require like digital businesses that serve them. What happened was the mobile phone and mobile connectivity just made that entirely irrelevant. So just leapfrogged that very quickly. And that's how you had the rise of like all these companies on the back of it. So you could say that that's possible within certain spheres like fintech. I think where we don't have, and it depends on where you look at fintech, is stuff like we just don't have enough infrastructure, soft infrastructure for deep tech, really. So stuff like anything that's heavily reliant on research, on primary research at like a research university, and then kind of comes out of that, or from a large corporation that needs to do a lot of in-depth research. I think we just don't have the non-investment, non-commercial ecosystem for that yet. You need large research universities doing really cutting edge stuff, students coming out of that, and then kind of emerging into those fields. And I'm not seeing that as much. I mean, we're veering off of fintech, but where you can say there is an opportunity is something like AI, because even though that does require a lot of private research, etc., but what we do have in abundance is energy. And I think that is a very energy intensive business. And you have energy, you have capital. And that if you build a lot of the compute power, the data centers, and be able to provide the energy, that could be interesting around. But the business models for that are not super clear as to how do you extract the maximum value from it.
Such an interesting point. But I mean, at the moment, there are very few data centers in the region, aren't there? So I guess that's been one of the arguments as to why AI development has been sort of concentrated in the US and I guess China. And it's interesting you see that as a kind of, because I think that is a very logical step, isn't it? To actually start building the infrastructure.
Yeah, it should make sense, I think. And there is a lot of move towards that. But I think you can build the infrastructure layer, but then you need to do the software layer, right? Like the next layer, the actual technology itself. That, I mean, it works in the US because you have between Stanford and Berkeley in the Bay Area, you have the people all doing it, right? Who are the primary researchers, right? And in China, it's state-directed like institutes that are at the cutting edge of this between Beijing and Shanghai. So like, you need that kind of raw intellectual investment and power to be able to produce use cases or businesses that kind of are on the cutting edge in deep tech like that. We just don't have that. I'm not sure if we do have these I mean, you do have a lot of the investments happening in the infrastructure, that I know, in the data center space, in the AI space, etc. But I think it's almost you have to go way kind of upstream, right? Like to kind of really figure out the beginning of it. What do you need to build? You need to build like a number of well-endowed research universities that take it to the next stage. That's an entirely different thing.
As you mentioned AI, I've got to ask the AI question. How far progressed is the AI investments in the region? And also, do you think we're already in a bubble or we're heading towards a bubble? Or will this just carry on like fintech has?
A great question. I think the way to think about it is kind of AI writ large. I think we don't know, globally, I'm not sure where it's heading. So, but these are the dynamics we're sort of thinking about and struggling with right now. So, which is number one, there's that kind of that you can put it into different buckets, right? You have the infrastructure layer, which we just talked about, which is the compute power, the data centers, and the energy. And that's kind of a clear early winner. I think everyone agrees. The second area is the actual technology itself, whether it'll be closed source or open source. Will there be a standard or it doesn't work like that? So whether it's OpenAI or kind of one of the others, that's a question. And then the third, is AI a distinct category or is it a mode of doing business within software? So, which is, or naturally heading towards. So what does that mean? So if you have marketing CRM business and it does well and it's growing software business, let's say CRM business. And suddenly you need to leverage either the open or closed source models to be able to kind of automate what you're doing. And that's an example. And they may call themselves an AI company and maybe they've developed some kind of their own bespoke AI functionality, but really that is just a business model that is just layering AI in its processes to automate their offering. So there's a school of thought that says that's the future of software. That's where we're going to invest. And that's just making companies much more effective and disrupt incumbents and just become much more. That's going to be the nature of how everything works. It's on an AI basis and goes from there. And that's what I think as VCs, we would like to see, because basically what it does, it brings the cost of starting a business down incredibly, and you'll have access to investing in these companies. The alternative worldview that's kind of formalizing my head is if actually you don't need companies anymore, that AI, if you extrapolate the power of artificial intelligence to its logical conclusion, then basically I as an individual can go on, like, I don't know, the equivalent of OpenAI and say, look, just type in build for me an agent that does B2B outbound sales, and it'll go do it and it'll build the software for me in like 10 seconds. And it'll be like, okay, execute, go do it for me and do this and do that. And then suddenly you have a business of one, and that's no longer an investable business. The only investable business really is the infrastructure and then the layer building these AIs. And these are all these agents talking to each other. In that case, that's a whole different world, right? Like it's an entirely different universe. And the opportunities are very different. And so are the challenges that I cannot fathom them, really.
So interesting you say that, because I think there's a lot of excitement around agent and agentification. And if you follow it to a logical conclusion, Dharmesh and I were chatting about agents in finance. If a business has an agent which creates a product, and then the consumer has an agent looking for the best product, and the regulator has an agent which is sort of making sure that everybody plays nicely, you can very quickly end up in a position where there is no finance system anymore because it's sort of optimized out of existence. So
we're all in the matrix, as I like to.
Yeah. I mean, there is something where if it gets good enough, it's abstracted to such a degree. If you just follow that kind of curve, just keep going into the future, then you get to a point where it's like, well, there's no human beings anymore involved, and there's no companies per se. It's just agents talking to agents, right? That's what it is.
But it's fascinating as well, because I think you use the word efficiency, which I think in terms of one of your big themes. And I think about efficiency as, I guess, every country, every company has inefficiencies. And that's what I think these things will start going after, is sort of the inefficiencies. So maybe we'll go through 10, 20 years of kind of, I don't know, mass efficiency across the board type thing. And then we'll reach that place. So it's kind of interesting to think about this in sort of near, mid and long term, what could kind of happen. But it's a fascinating topic.
It's also like a time scale question, right? That is the ultimate scale, will look like that. It's just, what is that time scale? Is it 5 years, 10 years, 50 years? I mean, I'm not close enough to this or smart enough to understand it. Yeah.
We met with one of the heads of Digital Dubai, and they were talking about zero bureaucracy in Dubai. That's a sort of stated, and you kind of go, well, what's the logical conclusion of that? Is complete efficiency. So nothing standing between you and anyway, listen, we're sort of going off track, but in a fascinating,
deep down the rabbit hole.
Yeah. But I love it. And I think it's an interesting conversation to have. We are actually running out of time. So, but I think you've given us a really great insight as to what you're doing and how you're doing it. What are your feelings about, I sort of look at where you are, and I look at where the world's population is likely to be in the next sort of 100 years. It feels like you're not in a bad place, to be honest with you, with all the things kind of going on. So have you got sort of any sort of last reflections?
Sure. On the Middle East generally. So, I mean, they're really kind of two Middle Easts, right? The Gulf primarily, or three Middle East. There's the GCC, it's kind of oil rich and is in the process of radical transformation, especially out of Saudi and the UAE. And Saudi has kind of caught on to that past 5-6 years. And then you have the kind of GCC aligned, more similar to GCC, but non-oil rich kind of countries. And those are primarily, Jordan, Iraq. Iraq is oil rich, but to a lesser degree, and Egypt. And then, North Africa is a bit further afield, but I put Morocco, Tunis in that. Then you have the kind of quasi-socialist, prior socialist, but now generally war-torn kind of other part of the Middle East, which is Syria, Yemen, Algeria, places like that. So those are kind of three buckets of countries. What's interesting is what we have going for us broadly in the Middle East is a relatively positive fiscal positions for these governments across the region, especially the GCC. Forget the other countries. Number two is, I don't think oil is going away anytime soon. So I think there's a lot of room for kind of that to keep on driving stimulus. Number three, the massive reinvention of these societies and these economies out of the Gulf that reverberate across the wider region. So those are social, political, and economic. So you have a broad move away from statist ideology, meaning like this idea that the state should be omnipresent, omnipowerful, and the owner of all capital and assets, and really defines the way people structure their lives privately as well. So that's changing at a pace that I think unique in human history in the Gulf. that has a very positive impact indirectly on the rest of the non-GCC Arab world, because as this part of the world, the capital goes where the owners of media and the owners of kind of economic opportunity change, that will immediately impact places like Jordan, Egypt, etc., which has a positive effect. And I think this kind of frame it not from conservative to liberal, but rather from statist to non-statist, from central to a bit more decentralized. This kind of also has with it this unleashing of massive economic opportunity as the state moves away from just, I want to own everything or drive everything, to, I want to unlock entrepreneurs, founders to kind of build stuff. And that's everything from fintech to the guy opening a hair salon, right? Like it's like the whole kind of gambit of things. So that I'm very, very excited about, because you need the regulatory kind of liberalization, but to also have an effective entrepreneurial innovation society, it's also social. It's not just about lower taxes and lower regulations. It's also about building a mindset where the social contract moves towards, it's not about the state as the alpha and the omega, but rather the state gives you the opportunity to build the life that you want. And that's what fosters kind of new economic opportunity. And I'm really excited about that. So in that sense, I think that's a massive tailwind. The second, I would say, demographics. We're still one of the few places in the world where there's very positive natural population growth, although it's slowing down considerably, but it's still there. So I think that's cool. And then the kind of other beta is if the places that have never been part of the regional economy in any meaningful way, namely, like I said, Iraq, Syria, Yemen, if that gets resolved in the next 10 years and there's a wider kind of political kind of calming down, then I think you have an explosion of economic activity across the region that I'm really excited about. But those are a lot of speculation, right? That's like getting a little bit into a crystal ball. But I think it is a broadly positive time. And I do think that the latest kind of conflicts like in Israel and are kind of the last to happen in our region, because that also helps if that's resolved. So I'm hoping this is kind of the end of that story as well. But let's see. I mean, that I'm not outside of my...
We do as well. I think it's a good thing for the world. But I have to say, every person that we speak to in the region just gets us very excited about what's going on in the space. And Dave and I are both about that successful exits. And I promised my wife I wouldn't do a fourth startup. But every time I speak to people like you, Khaled, I kind of like, oh, maybe I should just do one more.
It's always worth doing one more.
Totally. Thank you so much for joining us. It's been a really good conversation.
No, thank you. Thank you for having me. Really appreciate it. Thanks, guys.
Thank you for tuning in to Dave and Dharm Demystify. We hope you enjoyed the show. Don't forget to like and subscribe, and tune in next time as we take another topic and demystify it.